you at all surprised that oil has held up as well as it has?
I am. I thought this would be worse. We've got a worst-case scenario with winter being warm globally. And then, of course, the coronavirus is really, we've heard stories of traffic in Shanghai being down 90% and other stories. Now, you've got to remember that there is about a 4 to 6 week lag in the oil market in terms of what happens physically. So we're not quite there yet, but we should be really seeing the physical impacts very shortly, and we're holding 50 with the dollar against us. So I'm encouraged.
Are you at all surprised that, well, let me come at it a different way. Do you think that the stocks are going to stay moribund for a long, long time?
We think the problem is the strategy of the companies. So, we've been pushing very hard in many ways for the companies to shrink themselves, to raise their returns, to raise their cash returns. And we were effective in this with refining. Refining's done very well. Now, if you're worried about what we call the Tesla effect or the Greta effect, you'd have to ask yourself, why has refining performed so well? Why do gas stations sell for such high multiples? And our view is because they have very high cash return to shareholders. You get paid out over the next 10 years if we can get to a 10% built-up yield, and therefore you don't care about year 11 on and beyond if that's the kind of payout that you're getting.
That's the dirty little secret, I think. We've been talking about Tesla's rise and everything and ESG investing. The demand for gasoline and oil, and cover your ears if you don't want to hear this, folks, is going to increase globally for the next 20 or 30 years, correct?
Yeah, look,
everybody in India and China and the Philippines and everywhere else is not going to be driving an electric car.
Right, Brian. I wrote the note, The End of the Oil Age, 10 years ago. If you told me when I wrote that note that we'd be at 100 million barrels a day, which we are today, I would have said, I'm going to heaven. But of course, that's not the way the companies have managed the strategy. And just to continue my point, if you think about a 1% yield on a US E&P, you're arguably discounting 100 years of ownership.
If that's the case, then why do we see now oil and gas companies saying that they're going to make a big push to go green? You've got BP saying that they're going to reduce the carbon footprint to net zero by 2050.
Right.
If oil keeps going up, why do they need to do that?
I think it's questionable. I think it's very questionable. It's also questionable whether they're going to invest as well as if they would give the cash back to you and let you make the decision on whether you want to buy Tesla at the margin. For me, it would be smarter to say, look, we're going to shrink our emissions by shrinking our company. We're going to cut our capex. We're going to massively increase our cash returns. And really, the example I was just talking to Brian about is think about the tobacco model. And maybe these stocks are actually at lows in terms of how low they can go, because we now have yields above a Philip Morris or something where, you would say the ESG challenge is extremely high.
Which oil companies do you like and why?
Well, we're really focusing on special situations. So we're very involved in the Marathon Petroleum situation where you've got a big change there. We've upgraded Oxy to begin the year.
Why?
Where, again, you've got a special situation. We think it works both ways. You've got a 7.7% yield. You've got operational improvement that we always saw before the Anadarko deal. We've had a good update from the company yesterday, 8K, which showed that they're in the right direction operationally. They're hedged for this year, quite a lot.
A lot of debt.
The problem is the equity goes down and the debt doesn't. So that is an issue from a takeout point of view, because that would be Route B, which is that you've got A, which is that Vicky Holub delivers, and we hope she does. And Route B was that if it's not happening, then you've got the activists, and you can then see a takeout situation. But the equity going down doesn't necessarily make it a whole lot smaller bite because of the debt burden that you have there. So that's a bit more problematic. And we're all hoping that consolidation obviously can hit this sector and get costs down and returns up, which we've been waiting for a long time.